Hey there, crypto family. Welcome back to another video. We're bringing that daily crypto news. Today's article comes from Decrypt, and it's how crypto tax software can simplify your taxes. Preparing the paperwork for your crypto taxes needn't be a chore with tax software like Coinly streaming the process. So this is going to be a review over Coinly in this article. There's also cointracker.info, cointracker.io. So there's plenty of other softwares out there if you need help keeping track of your crypto taxes, because it's getting closer to the deadline when you need to do them. And a lot of people have been traders this year, so they may have hundreds to thousands of transactions going on throughout the entire year. Unlike me, I barely have any, maybe 2 pages worth, not that much at all. I don't trade much on exchanges, or I just hodl. So my crypto taxes are very simple. But let's go over this in case you guys need some help in your crypto taxes this year. This post is part of the Roll Up Decrypt's curated collection of stories presented in partnership with Coinly. So here we go. If you currently hold cryptocurrency in your portfolio or you have traded crypto over the past year, it's high time you started figuring out your crypto tax obligations. That can sound like a daunting prospect, even if you don't own anything in taxes. Browse through crypto social media and you'll find that the main tax preparation advice given to newbie traders is to make a note of the details of every trade. That means you need to record the purchase or sell date for each trade, as well as the purchase or sell price, and take into account complications like dollar cost averaging. And that's before you even begin to take into account the complexity of flipping NFTs or decentralized finance tools like flash loans and yield farming. It all adds up to an awful lot of paperwork, but trying to maintain a meticulous spreadsheets in minute detail is not only draining, but also plain unnecessarily. There's no need to lose hours over crypto taxes when you can easily automate almost all the process simply by using crypto tax software like Coinly. It offers an array of free features and services that needs of all sorts of investors and traders alike. Here's how tax software like Coinly can streamline and simplify your crypto taxes. It can import your data from cryptocurrency exchanges. When you sign up to Coinly, you'll be able to be asked to plug in your crypto data from any centralized exchange you use into the web-based software. The process doesn't require your exchange login details or the KYC documents you shared. So yeah, be aware of that. If like anyone is asking you to log in at the KYC, be kind of speculative about that. Could be a potential scam, and you don't want to get ruined. And all it requires to get things started is your raw trading data. That's it. So since centralized exchanges are used to working with crypto tax software, the process is rather straightforward. Exchanges can share your data with Coinly via API, an intermediary technology, or in the form of a CSV, a Microsoft Office Excel file type, which you can download and then upload to Coinly yourself. Either process takes just a few clicks. Coinly currently, who works with 370 centralized exchanges, including big hitters like Binance, Coinbase, Kraken, and FTX, meaning that your preferred exchange is almost certainly supported. There's videos on YouTube that can help out how to import your data from hardware. If your crypto investment and savings account or similar through other centralized platforms such as Nexo or BlockFi, that's no problem. Coinly works with 11 major services. Or if you're a not your keys, not your coins kind of person and use self-custody wallets, you can get Coinly to read your wallet data with ease. The software supports more than 50 wallets, including software wallets such as MetaMask and Electrum, alongside hardware wallets such as Trezor and Ledger. Now scan and collect your DeFi data. With the rise of decentralized finance, or DeFi, crypto tax calculations now have to go beyond simply importing data from centralized exchanges, taking into account DeFi tools such as decentralized token swaps, liquidity pools, and yield farming. However, because the blockchain data that underpins DeFi is orderly, predictable, and immediately available, it's relatively simple for crypto tax softwares like Coinly to read. With the exception of a few privacy-oriented blockchains, DeFi is largely built on top of a transparent blockchain like Ethereum and Avalanche. That means anyone can see what anyone is up to. Now throw priot.ether into the blockchain explorer, Etherscan, and you can see in real time what the crypto-savvy Russian punk band is up to the on-chain. For crypto tax software, the benefit of on-chain transparency is that it can effortlessly scrape and analyze your crypto activities in order to calculate your tax liabilities. And then Here's a video on how to do staking taxes with Coinly. Coinly lets you sync data from most major blockchains, and it's highly customized to work with their native technology stack. You can plug in anything from a phantom public address that starts with OX to a BTC XPub key or Cosmo address, and Coinly will analyze them in conjunction with other data from centralized exchanges. Now, flag inconsistencies and reconcile. Here's a video on common mistakes when filing their crypto taxes. As your data is flowing in from multiple sources, you'll sometimes find clashes and inconsistencies, which would be a nightmare to address. If you are using pen and paper, tax software can flag them to help you work out with these issues and reconcile your accounts. In some cases, it can be due to complex actions on exchanges like forked, coins receiving airdrops with no cost basis, or putting crypto into a savings account and taking it back out in transactionally complex ways. You don't need to trace back these issues individually, but if you don't feel confident in your own reconciliation, Coinly offers a premium expert review service. One of Coinly's crypto tax experts will closely review your data and make sure everything's fine and resolve any outstanding cases. Now, generate the complete paperwork. The tax process involves a mountain of paperwork, but tax software can help take care of that. Coinly not only is useful for collecting and organizing your crypto data, ready for reporting, it actually does a job of dealing with the paperwork and completing the necessary forms. That means software will fill out the IRS report, the Form 8949, and Schedule D for capital gains and losses, and Schedule 1 form for income totals. Here's the Coinly thing. Need help doing your crypto tax with Coinly? We've got a bunch of videos on our YouTube channel to help make your crypto taxes easier. All you need to do is just submit them. If you use software like TurboTax and TaxAct, you'll be able to upload those documents as part of your overall tax submission. Phew! Now keep tabs on your portfolio. Although most people turn to crypto tax software near the end of the tax year, one obvious benefit they offer is the ability to keep tabs on your portfolio all year round. Apps like Delta and Zapper are good for tracking centralized exchanges and DeFi, respectively, while Coinly's holistic attitude to crypto reporting makes it ideal for monitoring the health of your overall portfolio. By keeping your portfolio under your watchful eyes, you can also spot opportunities to minimize your tax burden early in time, a legal strategy called tax loss harvesting. Once you've submitted your taxes with the help of Coinly and weighed up your gains, you might want to explore jurisdictions with crypto-friendly tax regimes. And if you do decide to pick up the sticks, keep in mind that Coinly supports more than 100 currencies. So yeah, that was basically like an ad for Coinly in this article. But I just do know people do need help when it comes to the tax season in cryptos, because a lot of newbies who get in the game are usually like really just chasing the wave, trying to make as much profit as possible, but then don't realize like each one of those trades is a taxable event. Every time you swap a coin, every time you sell a coin, every time you move a coin off of an exchange to another exchange, that's considered a taxable event. So it's kind of like tough. That's why I usually do like the anonymous swaps, keeping coins in a cold storage wallet, just nothing that really links to you. I'm not saying how you should do it, people, but it's like, I just know people need help with their taxes when it comes around. I'm no tax professional. That's where you need your financial advisor to help you out with. But this can just simplify if you want to do your taxes yourself. Because yeah, I can only maybe done 50 transactions on a centralized exchange throughout the year. While you may have people who do 100 to 1,000 on multiple trades, try to catch that wave. So one of these softwares could be easier. So my recommendation is, do some more research. This is just a review on one of the coins or coin tracking apps. Watch a couple of YouTube videos outside of this, like a full review of people who actually use the service. Make sure they're legit. And just be safe out there when handling your cryptos. Report what you have to. And don't try to hide money from the government. They're going to watch you and know where the crypto is moving. So guys, thank you so much for watching. If you like this video, hit that thumbs up, subscribe to the channel so you do not miss a beat. If you want all my videos organized, check out my Patreon. It's only $5 for the month. And you get everything just right there, a lot easier than having to scan through all my videos, go, oh, there's the theta video, there's the Divi video, or there's a how-to. It's just a lot more organized. So thank you so much for watching. I appreciate all of you and all my patrons out there already. And until next time, the Crypto Sherpa is out.